Hey everyone, Extreme Crypto here. Welcome to the series of how to use different indicators. The first one we're going to look at is the accumulation distribution, the ADL. The definition: accumulation distribution indicator, or ADL, is a volume-based indicator which was essentially designed to measure underlying supply and demand. It accomplished this by trying to determine whether traders are actually accumulating, buying, or distributing, selling. This is accomplished by plotting a running total of each period's money flow volume. ADL can reveal divergence between volume flow and actual price to primarily either affirm a current trend or to anticipate a future reversal. So the history of this indicator. The accumulation distribution line was created by famed stock analyst Marc Chaikin. The ADL has become closely related to two of Chaikin's other famous indicators, the Chaikin oscillator and the Chaikin money flow indicator. We're not going to go into the calculations. So the basics of this indicator. When breaking down the formula, what ultimately causes the ADL to rise or fall is the money flow manipulator. The money flow multiplier is determined by the relationship between a period closing price and the period high and low range. The money flow multiplier is always within a range of 1 and -1. When a period closes in the upper half of the high-low range, the money flow multiplier will rise closer to 1. On the other hand, when a period closes in the lower half of the high-low range, the money flow multiplier will fall towards -1. The closer the multiplier is to 1, the higher the buying pressure. So when you combine a highly positive multiplier with strong volume, the ADL will rise. When you combine a highly negative multiplier with strong volume, selling pressure will rise and the ADL will fall. Therefore, ADL can be seen as a way of measuring the strength of buying and selling, accumulation and distribution pressure. With this in mind, ADL becomes a valuable tool in both confirming trends as well as anticipating reversals. That's a great option. It's confirming trends and reversals, giving an indication which direction the market might go, what to look for, trend confirmation. This is actually the simplest benefit of the ADL. During a strong uptrend or a strong downtrend, the ADL will actually move in the same direction as price confirming the current trend. Divergence. Divergence plays another huge role in analyzing the ADL. It is believed by many that volume precedes price, so any instance in which volume and price are heading in opposite directions should surely be noted. ADL will help the trader identify these instances. Bullish ADL divergence is when the ADL is trend upward while price is trending downward. ADL trend up shows an increase in buying pressure accumulation. Assuming volume does precede price, a reversal in price definitely seems possible. Bearish ADL divergence is when the ADL is trending toward downwards while price is on the rise. In this instance, ADL is signaling an increase in selling pressure, distribution, and price might soon take a downward turn. Now, if we look at these two graphs, as we can see in the first graph, the current market was moving downwards, while the ADL was moving upwards, which is indicating a divergence. And as you can see, soon afterwards, the market turned and started going upwards. If you look at the bearish, the ADL was going down while the market went up. And not long afterwards, the market turned and went bearish as well. Unreliability. As with any indicator, it is important for whoever is employing the ADL to understand its shortfalls or weakness. ADL's major shortfall is that the money flow multiplier, which plays a major part in determining which direction the accumulation or distribution line will move, does not take into account the change in price range between periods. This means that if there is any type of gap in price, it won't be picked up by the ADL, and therefore the line in price will become out of sync. So the short summary. Overall, the accumulation distribution indicator is a fairly reliable indicator for calculating underlying factors on a securities chart. This is not something that is easily done, so ADL can indeed be quite valuable. However, knowing the underlying buying and selling, accumulation and distribution pressure is typical not enough on its own. That is why ADL is best used as a complementary indicator that is just one aspect of any trading program or strategy. Another reason why ADL should not necessarily be used as a standalone in the unreliable mention in the previous section. Sometimes ADL can become out of sync with price. It is typical best to have other tools in place in order to have a system of checks and balances. Now with this summary, I totally agree. On all my charts and trading, I'm using at least 3 indicators, and I'm waiting for them to confirm the same indication before I'm getting into it. Looking at this style is just the way you can set it up. It's a line. Accumulation and distribution can toggle the visibility of the ADL as well as the visibility of a price line showing the actual current value of the ADL. Can also select the ADL's color, line thickness and physical type. Line is the default. Properties, last value on price scale. Toggles the visibility of the indicator's value of the vertical axis. Agreements in header. Toggles is visibility on the indicator's name and settings in the upper left corner of the chart. Scaling scales the indicator to either the right or the left. So ladies and gents, this is the accumulation distribution indicator. The first one in this series as we go through many indicators. A great one to use, seeing divergence and giving you opportunities in the markets. If you would like more videos like this, please hit the like and subscribe button so I can know to make them. Enjoy and make a lot of profits. Have a great one. Take care.